Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, June the 30th. This is the last day of the second quarter and it's the last day of the first half of 2017. Also, before we go to the markets, please know that all of us at ToniTurner.com wish you and your families a safe and enjoyable July 4th holiday. And now on to the market. Equity indices gapped up this morning, but they're now spinning their wheels, leaving the NASDAQ composite just about at the flat line, while the S&P 500 is hovering a few points above the session low. 6 of 11 sectors continue holding gains, but the top-weighted financials and technology have been knocked back from their opening highs. Industrials and the consumer discretionary sector are the only two pockets so far today of noteworthy relative strength. And now let's go on to three charts that could give us some insight into the week to come. Our first chart, as we usually do, is a chart of the S&P 500 spider, symbol SPY. We follow the SPY because this is the exchange-traded fund that follows our S&P 500 benchmark index. Now, we note now that we did have a new all-time closing high on June the 19th at $244.66. Now, however, the SPY, the S&P 500 here, has rolled down a little bit. It's finally back down below its 20-day moving average. And when I captured this chart today, the SPY was trading at $241.84. Now, we do want to get cautious here. It's trading below its 20-day moving average and above the 50-day moving average, which now comes in at $240.93. That's the green line you see right here. Now, we do believe that the 50-day simple moving average is an important indicator because a lot of the institutional traders, the guys and gals who have the ability to move the market, plus a lot of us out here, we also watch the 50-day moving average and we consider it a slight negative if price falls below that line, especially if it stays below that line for, say, 3 to 7 days. That means the market is trading below its intermediate trend line, and of course, that is an indication sometimes of more weakness to come. Now, we can see here again, we're going to call the $240.93 50-day moving average. We're going to call that support here, which of course it is. We see yesterday's low as price support at 240. Now, if price should continue to move back down through all that, we have more price support that's pretty decent at $235. I'm not drawing a straight line here, but you can see it, and down at 234. This area right here offers key price support. That would be 2350 and 2340 on the S&P 500 itself, and so that would be key support of the S&P 500. Now, if for any reason, and it's certainly not going to happen next week, the SPY were to head below this line, then you know what's happened here is that people who buyers who bought down here at 235, 234 and then enjoyed this ride up, they're not buying again. They're not saying, heck, the last time the SPY was down here, it bounced, I bought it and it bounced and it rose higher, so I had a good experience and made money. If they put their hands in their pockets and don't buy at these support lines, then we know that the S&P 500, the SPY, could indeed take a leg lower. Now, our next support down here coming in at a moving average level is about 229, 230, where the 200-day moving average is coming in. So at any rate, we want to watch this 50-day moving average. Now, is there a chance that the SPY could bounce off of it and move back up toward 245 and back up to prior highs and maybe even over them? Absolutely, absolutely. This is kind of where the rubber meets the road here. This is where we see whether the SPY, the S&P 500, needs to take a summer rest, or if it has the energy, which means the buyers, to move back up and continue the uptrend that it's in. Our next chart, and that will all come into factor next week. Our next chart is the PowerShares QQQ, symbol QQQ. Now, as you all know, this is the top non-financial stocks in the U.S. stock market. The QQQ touched a new all-time high on June 9th at $143.90. And since then has fallen down below the 50-day moving average. And as I captured this chart, the QQQ is trading at $137.77. Now, this is indicating that the top components of the QQQ are getting a little weary here. And of course, you all know who they are. They're the momentum stocks. We think of Amazon, we think of Google, Microsoft, Facebook, that whole crew. They're the ones that are getting a little tired after an incredible run up. I mean, if we look back to December even of 2016, we see that the QQQ, with certainly on the back of these big tech stocks, has risen without falling below its 50-day moving average since the beginning of the year, and it's going into its 7th month now. So that's without falling below the 50-day moving average, which in fact it has done in the last 2 days. But it's had an incredible run here. Nothing goes up forever. Markets do run in cycles. They do move. You have to go down in order to go up. So it does look like the Qs are taking a rest here. Now, we do want to note in Tony's Market Club this past Monday session, I started drawing for them a pattern that may play out here. It's pretty darn close to it right now. This pattern that I'm drawing for you is called a potential head and shoulders pattern. This is actually called the top reversal pattern in technical analysis. A top reversal pattern does not mean the world's coming to an end. It does mean a stock or an index, an asset, an ETF is getting tired here when we see the left shoulder, the head, and then the right shoulder come into play. And then what we do after that is we draw a neckline, what we call a neckline, which indicates price support for this particular pattern. Now, it hasn't happened yet, and it may not, but if the QQQ drops decidedly below 136 and down toward 135, and if the candles close below that line, it's possible that the QQQs could have a little move lower here in upcoming weeks. It doesn't mean they're going to go down in a straight line by any stretch. It does mean, though, that price could soften here and get back down to more of a level running into 132, 133. We do see quite a lot of volume down here, and that it could indicate that there's some selling going on. Note the volume down here is pretty high compared to prior days. It could note that some people are saying, hey, I'm taking profits here before the summer. Some of these companies, Amazon, Google, Microsoft, have had incredible runs, and so, as we said, nothing goes up forever, and this is a 6-month run here. So we could have a little softening, which is good because that will give us opportunities to get into some things we wanted. But do keep an eye on the Qs, and if they do go below these lines, we could see a further pressure lower. Our final chart today is a chart of the Van Eck Vector Steel ETF, the SLX. I don't know if we've looked at this at all or ever, but I'm interested in looking at it today. I've been looking at it myself for quite some time. I do find that when I study, when I just sit and watch, I should say, the charts of exchange-traded funds or daily charts of stocks, if I just look at them, many times I'll watch them and not trade them, and I'll just watch to see how their patterns have played out. I've noticed that since it's high back here in February, let me get that number for you. Since it's high back here in February, we had a high of $45.27. Then the SLX, which is the symbol for this particular exchange-traded fund, moved in a pretty darn steady downtrend from February all the way down into June. Quite the opposite of the Qs that we've just looked at. In fact, the exact opposite. So the SLX moved in this downtrend. The 50-day moving average actually kind of drew a trend line here for most of the move down. Now I've been watching over the past couple weeks as the SLX has rebounded. I've been watching U.S. Steel. I've been watching AK Steel. The Van Eck Vector Steel ETF, the SLX, again, has 27 holdings. Some of the top ones are Rio Tinto, Vale, Nucor, ArcelorMittal, Reliance Steel, and again, AKS. So I've been watching this move here, and I'm wondering, since it has moved down such a dramatic amount, it appears to me, at least technically, that the downtrend, at least in the moment, could be over with. Now we've had some talk around Washington of steel, of putting tariffs on steel imports. However, officials have pretty much poured some cold water on that. What I'm going to do now is watch the technicals of SLX. The 50-day moving average, it fell down below the 50 and the 20-day and the 200-day moving average. Again, came down to these June lows down here, just around 35. Now SLX has moved up, as I said, pretty dramatically. The MACD is above the zero line. The RSI is climbing. And when I captured this chart today, it was trading at $38.61. So if the market is strong in the coming week, and we know that the market will be closed on July 4th, but it will be open Monday, and if the market is strong in the coming week, I'm going to keep an eye on the SLX. Again, it's above its rising 200-day moving average yesterday and today. The rising 200-day moving average does not usually provide much resistance. In this case, it's now providing at least short-term support. The SLX is also above its green line, the 50-day moving average, and the 20-day moving average, the red line, even though these moving averages are inverted from normal. If the SLX keeps going up, they will gradually find their way back. And suffice to say, it's above these lines, and that's important. So if the market looks strong next week, I may nibble by small share size of the SLX. Of course, you know that the 50-day moving average here comes in at about 36.75. I might buy a little, wait for a pullback, hopefully that comes just right back down toward 37 would be nice. Then hopefully would bounce again. Now, if that is true, I will again nibble a little bit on SLX, maybe add a little more if it goes in the right direction. As you all know, I will not hold this ETF any longer should it fall below the 50-day moving average, which is now coming in at about $36.75. Of course, that will rise with price if price rises. So we just use a close below that as our stop. The SLX is not an ETF that has enough volume to day trade, but it still may be something you want to look at for potentially holding for the longer term. And now on to next week's economic reports. But first, please join us this coming Monday, July 3rd, for our next session of Toni's Market Club. We will talk about which side of the market to trade, whether those dicey charts we're looking at with the SPY and the Qs, which side of that to be on. We'll talk about three long positions, long new trades potentially, and two short ones. We'll have a mini trading lesson. This is a low priced, high value opportunity for you to learn more about the market become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. By the way, one of our picks this week was JP Morgan Chase, and a lot of you may know that flew higher in the last couple of days. So we've done very, very well on that. Again, for those who cannot attend our live session, no problem. The recording of our session is available a few minutes after the session ends to all of our members. For more information and to join, go to tonysmarketclub.com. Now, coming economic reports on Monday, we have the ISM Index, auto and truck sales. Tuesday, the markets closed for the 4th of July holiday. Wednesday, we have the FOMC minutes. Those sometimes move the market. Thursday, we have the ADP employment change, jobless claims, the ISM services index, and both natural gas and crude inventories. Crude inventories are a day late because of a holiday. Friday, we're going to have the monthly jobs report with the unemployment rate. That's always one that everybody keeps an eye on. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, have a fantastic 4th of July. Keep green on your screen. I'm Toni Turner, and this is The Market Now.